What's good, people, traders, and dedicated gold chasers? And welcome back to another weekly review with your boy, Marcy, at the Modern Day Trader. And we're back with another one. Now, this week, what you can see, as always, is my journal on this side of the screen. And I'm pretty excited for this week. As you guys can see, we are getting quite close to the 100 trade mark for 2022. So just bear in mind, a quick reminder that this 98 trades has multiple adjustments to my trading plan. And what I can say is that before we fold it for this week, that the adjustments for the trading plan, the detail for the trading plan is getting more in depth and more in depth. And ultimately just allowing me to sit in my hands and let things just play out, let the dust settle certain weeks and only take the trades that I need to take. Important lesson of this week's video is sitting on your hands. So without further ado, let's jump straight into this week of trades or this week of trading. As you guys can see, a total of 2 trades this week, 100% win rate, with a total of 4R, right? Both trades, funny enough, both trades were taken on Monday, the 5th of August in London session, 1 hour before London Open, and then 1 hour after London Open. And obviously, as you guys know, there's been this big meltdown in the market. So majority, or both of the trades were shorts, as you guys can see, both continuations, 2 different setups, but ultimately just taking advantage of momentum and volume in the markets and just allowing myself to capitalize on when the markets move and meet my plan. So without further ado, let's jump into the before of the first trade. As you guys could see, based off the information, as I mentioned, the hour before London Open at 7:53 South African Standard Time, taking an entry at 182.250. Ultimately, we were moving to the downside. We had a big push to the downside, continuation patterns, and a 10 to the downside from a 15-minute perspective. And what you can see is that price broke structure on the 15-minute, continuing with tons of volume in Asian session. Then you can see we had a bit of a pullback towards the end of Asian session as we're moving over into pre-London volume. You can see that with pre-London volume, we had a break of what I classify as the 15-minute level. And upon that break, I started going down onto the 1-minute time frame. So with that being said, on the 1-minute time frame, all I was waiting for was impulses to the downside to show me that price action is going to continue, and then a level being created with a decent fullback. Now, whilst it looked like all my other trades that I usually take, this is a bit different in that the stop loss is 75 fucking pips and the TP is 150 pips. Now, if I show you the after, you'll see that it played out exactly like all other trades would play out within the first 2 15-minute candles. Now, this is extreme conditions. And so you'd ask me, Marcy, your trading plan says that you need to stick to a 25 pip stop loss, right? Now, if I was to stick to that 25 pip stop loss, number one, I'd lose out on this trade, and it's a valid trade. But market conditions are shifting, and that's where it comes down to like you staying with current market conditions. Each 15-minute candle was roughly 50 to 75 pips. So all I was thinking in my head was that on average, usually 90% of the time, the pair has a 15 to 25 pip 15-minute candle, allowing me to have a 25 to 15 pip stop loss. Now, if the average range of the 15 pip candle changes, that means I can then adapt the market conditions and just extend my stop loss, knowing that when momentum comes in, as you can see, when momentum came in with the pre-London volume, price action will more likely than not hit my TP or hit my stop loss, whichever happens. Pretty clean, seamless day. We had the daily and the 4H plus 4H correlation across all pairs, and that I know it gives me roughly on a Monday 75% chance of determining or 78% chance of determining what the next candle could be. And with that in mind, I then went ahead and started anticipating that once price action pulled back. Let me show you guys from a 15-minute perspective. So these are all continuation trades. This is a slightly different trade compared to the breakout. But what you can see, the price action, as I mentioned, had formed lower lows, lower highs. And once price action got into this lower high area for this double top, or into this point of interest for this double top, all I did was I simply waited for a bearish candle. Well, I first waited for the 1 minute to break structure, as it did right there on the 1 minute time frame. Let me show you. So we had the break of structure here, and the reason why this is a break of structure is because if you just simply move slightly left, you can see a higher high being created, higher low that in turn creates this higher high, pull back, higher high, pull back, higher high. So this is our last higher low that created the most recent higher high. So we had the break of structure right here with the 15-minute close, right? And upon that 15-minute close, you can see we had created that wick, and that wick was this pullback right here. Now, all I'm telling myself is that if this is a true point of interest, and if this is a true lower high, we should then continue to the downside and push all the way down. Now, all my plan says I can do is take a 1 to 2, and that's what I did. So I entered at 182,800 area. I had a 40 pip stop where my stop loss was placed at 183,200, and my take profit was placed at 182 round number. And then all I simply did after that was let the trade play out. And you can see we went break even pretty much in the first 15-minute candle. The second 15-minute candle was a bit tricky because I thought we might get taken out the break even, and then we flipped and we pushed to the downside, and the rest is history, guys. And the reason why I have the title being the title and the whole aspect of self-discipline, self-control, sitting on your hands, is because the mere fact that this happened on Monday, both my trades happened on Monday, and there were potential trading days for the rest of the week. Now, there was no news. I know that with my numbers, this week is pretty much one of my 1A, 1B type weeks, where like this is the second best week of the month for me across a large sample size of data. And so with that being said, I could have easily said, look, this the best week for me. I can take all the trades that come my way. Now, a lot of the directional bias was correct, but I never really got an entry. I never got evidence on the 15-minute to even start to look for entries. And all I can do is pat myself on the back and allow myself to use this week as a foundational builder to say, look, when you don't have any trades, just sit the fuck on your hands. Just sit on your hands, protect capital, and you're going to be better off if you do that, especially if you had winners early in the week. Now, I've already made, last month I made 5% in total. Now, in the second week of the month, I've already made 4%. So now my goal should then be to just take high probability trades to basically push that 4% to either 6, 8, 10%. But my goal should not be to take every single trade that presents itself now once I'm up already for the month. It should just be to follow my plan and take the best trades according to the stats that I have within my trading plan. So guys, this week's lesson ultimately is that if you are up or if you are even down, and like, yes, there's high volume in the market, and yes, price action is moving, sit on your hands when you need to, because that's going to help you and allow you to protect your capital in your account and will position you in a better place to take better trades at a later stage when you have better trading opportunities. And so that's what I want to leave you guys with. Just take the trades that allow you to be positioned where you're taking the best trading opportunities. So guys, from your boy Marcy at the Modern Day Trader, I hope you guys had a lovely week. I hope you guys have a wonderful week next week. And remember to protect capital. Remember to sit on your hands when you need to. But then also, out of everything that I've said, remember to execute when your trading setups align. And remember to be self-disciplined, self-controlled, and love yourself throughout this whole process. So from your boy Marcy at the Modern Day Trader, don't forget that your unmatched perspicacity, coupled with your sheer indefatigability, makes you a feared opponent in any realm of human endeavor. Peace out, mate.